Hey everyone, Couch Investor back to another video for today. So let's talk about NIO and Xpeng in this video. Both of these stocks have gotten hit quite hard on Tuesday, both down around 9% during that day. So quite a heavy hit. And actually, both of those stocks have been hit quite a lot in the last couple of weeks, if not 2 months or so. Now, what exactly has happened? Well, let's start with this. So recent insurance registration data out of China has showed sluggish trends for most of the Chinese EV upstarts, and competition is still intense on the pricing front, with Tesla, for example, cutting the price of the Model 3 and Model Y yet again, not by much, but still a price cut. Bernstein here said, "We expect competition within the domestic market to remain intense and put pressure on pricing and profitability." And with those types of companies not being profitable, interest rates still being quite high, and if you want to ramp up, if you want to sell more cars, you have to do it in a profitable way. And if these things continue, well, it just becomes harder and harder. Forecasts for China electric vehicle sales in 2024 have been trimmed further in recent weeks. Analysts have also been warning that the geopolitical backdrop is a potential drag on sentiment. What backdrop, you're asking? Well, an exclusive here from Reuters. So EU investigators will inspect China's BYD, Geely, and SAIC in EV probe. Of course, there's no mention here in the title of NIO or Xpeng, but it might lead to those companies as well. So they said here, European Commission investigators are to inspect Chinese automakers in the coming weeks as part of a probe into whether to impose punitive tariffs to protect European electric vehicle makers. 3 people involved in the process said. So the inspectors will visit BYD, Geely, and SAIC, 2 sources said, with one of them saying the investigators will not visit non-Chinese brands produced in China, such as Tesla, Renault, and BMW. The probe, launched in October and scheduled to last 13 months, seeks to determine whether cheaper Chinese-made EVs benefit unfairly from state subsidies. Called protectionist by China, the investigation has escalated tensions between Beijing and the EU. Continue by saying here, Chinese-made vehicle share of the European Union's EV market has risen to 8% and could reach 15% in 2025, with these EVs typically selling for 20% less than EU-made models. We've been talking about this when talking about Tesla. I mean, the Chinese automakers are definitely crushing the competition because they can make those cars cheaper. Now again, there's no mention of Xpeng or NIO, but both of those companies want to grow internationally, and Europe being one of the next markets they want to go to, well, this will definitely hurt those companies. And we're not done yet because, well, if you remember, late last year, the US considers more tariffs on Chinese electric vehicles and other goods. So President Joe Biden's administration is weighing a tariff increase on Chinese EVs and other goods in an effort to make US clean energy products more competitive, according to people familiar to the matter. Again, it's all about diversifying, let's say, the supply chain. It's all about making sure that the people inside your country, the companies inside your own country, are not being driven out of business by Chinese products and services. It makes sense. It makes sense, especially since a lot of Western countries cannot operate inside of China. So yeah, fair game, right? Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now moving on to the next chapter of this video, still continuing on the China topic here, and we're now talking about economic growth. So apparently China's growth seen slowing to 4.6% in 2024, raising heat on policymakers. So if we look here a bit deeper, so China Q4 GDP seen growing 5.3% year over year versus 4.9% in Q3. GDP growth seen at 5.2% in 2023 versus 4.6% in 2024. The expected number, that is. Inflation seen at 1% in 2024 and 1.6% in 2025. Now, China's premier here said at Davos that China's economy grew at an estimated 5.2% in 2023, which surprised some people because officially that number was supposed to come out on Wednesday. And again, an estimated 5.2. Let's wait and see what the real number is on Wednesday. The premier also said that that growth in 2023 was achieved without resorting to massive stimulus and the economy was making steady progress. Of course, this is a bit of a dig at the United States, massive stimulus, then high inflation. But I then found out that China is weighing more stimulus, considering $139 billion of debt issuance under special bonds. So they say here, last year, China also tapped into extra government bond sales to help the economy. In that case, Beijing took the unusual step of raising 2023's fiscal deficit ratio to about 3.8% of gross domestic product, or GDP, an action that involved issuing additional sovereign debt worth 1 trillion won to support disaster relief and construction. Unlike last year, the 2024 proposal would use special debt, which in the past has been counted in addition to the normal budget and has not contributed to the headline deficit ratio. The ultra-long bond design means proceeds will be repaid over several decades, lowering the pressure to make payments in the short term. By the way, the premier also said that China is open for business and basically conveyed the message that, yeah, we want to invite Western investments, etc., etc. China is not that risky. Well, good luck with that. So, all of that taken into consideration, you might understand why these stocks have taken a hit. And it's not just right now, it has been already taking hits for a couple of weeks. Now, there has been some positive news with regards to NIO and with regards to Xpeng. With regards to NIO, for example, they already gave us the numbers, right, for the December deliveries. So they delivered 18,012 vehicles in December. That's increasing 13.9% year over year, and also beating their own expectations for that quarter. So that was great. So NIO also delivered 50,045 vehicles in the 3 months ending December 2023, increasing that number by 25% year over year. Overall, in 2023, they delivered 160,038 vehicles. That increased by 30.7% year over year. And cumulative deliveries of NIO vehicles reached 449,594 as of December 31st, 2023. So yes, definitely we're seeing here a good trajectory with regards to deliveries. But what is everyone looking for is a good trajectory towards profitability. Yes, they've already talked about some changes during the earnings call, which should definitely benefit the profitability side of the business, but these things take time. And if we continue to see price cuts in the Chinese market, if we continue to see more and more competition, well, it will just hurt a company like NIO, a company like Xpeng, and others out there as well. Now, if we currently look at NIO as a stock, has a market cap, company stock, has a market cap of $11.7 billion, trades at 1.1 times EV to sales in the next 12 months. Definitely not expensive. And as you can see, the analysts are expecting sales growth of 44.6% year over year in fiscal year 2024, then another 34.8% year over year growth in fiscal year 2025, but still not profitable. Now, if we go and look at the stock right now, the 200-day moving average sits at $9.5. The stock itself sits at $6.55. And yes, that's quite a crash since the highs in July 2023. And right now we have gone under that support line, which was around $7. So yes, we are a bit in no man's land. This is on the weekly chart. RSI is low, but definitely not oversold. Now looking at Xpeng, they also announced their own delivery results. So deliveries in December 2023 reached a new record of 20,115 units. That's a 78% increase year over year. They delivered in Q4 2023 60,158 units, a 171% year over year increase. And for the whole of 2023, that number increased 17% year over year to 141,601. They also announced their new X9 model. Market was pretty excited, but that excitement has died down, as you will see with the stock. Currently, the company has a market cap of around $10 billion. Also, EV to sales in the next 12 months is at 1.1 times. And here as well, we're seeing quite a lot of growth from a sales perspective. For fiscal year 2024, sales growth expectations there, 84.5% growth year over year. Fiscal year 2025, closer to 33% growth year over year, but here as well, still unprofitable. And now looking at the graph here, since the highs back in November, around $18 or so, the stock went down 42.7% to $10.62. 200-day moving average sits at $14.09. RSI sits a bit low but not oversold, even though right now we are sitting at around a previous resistance points back at the start of 2023 and even in April and May of that same year. So let's wait and see what happens in the coming days with regards to Xpeng and NIO. Maybe they might finish the week a bit more greenish, but currently if you look at the stock purely on a technical basis, it's a bit in no man's land. These names can be tradable, but right now the market is definitely giving you a couple of signals here. Look, I don't think we are interested in these types of companies right now. Of course, this might represent an opportunity for those that are looking for exposure in the Chinese market. Maybe right now, yes, at 1.1 times EV to sales in the next 12 months. The numbers, deliveries keep on increasing. You don't mind that the company isn't profitable right now, but you would like to see maybe better margins in the coming quarters. That maybe it might be worth a gamble. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.